This video is about the outcome of meeting of Monetary Policy Committee on June 6 to 8, 2023. RBI's MPC panel meets bi-monthly to discuss measures to keep in check the macroeconomic indicators of the economy. This is the second meeting for the fiscal year 2023-2024. First meeting was held on April 3rd to 5th, 2023. Let's look into the major outcome of this meeting. MPC panel decided unanimously to keep the policy repo rate unchanged at 6.50%. Keep it in mind, currently the policy repo rate is at 6.50%. The policy repo rate is nothing but the rate at which the central bank of the country, that is Reserve Bank, lends money to the commercial bank. It is a short-term instrument under liquidity adjustment facility, and it is also used as one of the instruments to control inflation in an economy. With respect to the policy rate, the standing deposit facility remains at 6.25%. Marginal standing facility and bank rate remains at 6.75%. This decision of Monetary Policy Committee is decided on the basis of assessment of current and evolving macroeconomic situation across the world. The Monetary Policy Committee also decided to remain focused on withdrawal of accommodation to ensure that inflation aligns with the target while supporting the growth. Here we need to understand the term accommodation. Accommodation monetary policy is one in which central bank attempts to expand the money supply, thereby boosting the growth. We all know inflation in the economy was above the tolerance level, that is 4% with a band of plus or minus 2%. And it began to slow down in the last quarter of 2022-2023. It was around 4.7%. To ensure that inflation was in line with the prescribed limit, the Monetary Policy Committee decided to withdraw the accommodative stand. Here we have discussed two components. One is inflation, another thing is a growth. These are the two components under the MPC framework. The decision of Monetary Policy Committee are based on these two objectives. That is, one is inflation, another one is growth, with the primacy being given to price stability. So keep it in mind, the inflation and the growth, these are the two components under the MPC framework. Looking into the assessment of global economic activity, RBI governor stated that it is expected, that is, pace of economic activity is expected to deaccelerate in 2023. It is due to the elevated inflation, tight financial condition and geopolitical tension across the world. Though the pace of monetary tightening slowed down in recent months, but there is a continuous status of uncertainty across the world because inflation continues to be above the target across the world. Growth of Indian economy. India's real GDP recorded a growth of 7.2% in 2022-2023, stronger than the earlier estimate of 7%. In 2022-2023, India's real GDP stands at 7.2%. With respect to the growth in quarter 4 of 2022-2023, it is accelerated to 6.1% from 4.5% in quarter 3. It is due to the fixed investment and higher net export. Coming to the important part, growth projection of the Reserve Bank of India for 2023-2024. Real GDP for 2023-2024 is projected at 6.5%. Keep a note on it because it is very important for upcoming examination. Real GDP forecast for 2023-2024 stands at 6.5%. With Q1 at 8%, Q2 at 6.5%, Q3 at 6%, Q4 at 5.7%. Risks are evenly balanced across 4 quarters of a financial year. Coming to the another important factor, inflation. Headline inflation, that is consumer price index, has come down to 4.7% in April 2023. Ease of inflation was observed across food, fuel and core categories. Core categories means CPI excluding food and fuel. Inflation forecast of Reserve Bank of India for 2023-2024. CPI inflation is projected at 5.1% for 2023-2024 with Q1 at 4.6%, Q2 at 5.2%, Q3 at 5.4%, Q4 at 5.2%. You should remember only this forecast for 2023-2024 that stands at 5.1%. Let's look into the numbers of current policy rates and reserve ratios. Policy repo rate stands at 6.50%. Standing deposit facility rate stands at 6.25%. With respect to marginal standing facility and bank rate, both stands at 6.75%. With respect to reserve ratios, there are two types of reserve. Cash reserve ratio stands at 4.50%. Statutory liquidity ratio stands at 18%. Next meeting of Monetary Policy Committee scheduled during August 8th to 10th, 2023. I think in this video you got the clarity of current Monetary Policy Committee meeting and their statement, and with respect to the inflation and the growth projection for the year 2023-2024. Thank you for watching this video. To get the regular update, follow the Telegram channel. The link for it is given in the description.